Tonight, the stress of filing your taxes, especially if you're worried about getting audited.
But CBS 2 has the 5 red flags the Internal Revenue Service looks for before they come knocking on your door so that you can hopefully avoid the audit. Anyone who's ever sat across the table from an IRS agent accounting for every penny on a tax return knows how scary it can be.
Was this enough? Yes.
There are a number of red flags the IRS looks for on your return that can increase your chances. Some of them you have control over, says Joy Taylor, a tax expert with Kiplinger, while others, like your income level, you don't.
The percentage rate for audit is higher for people who have higher incomes.
If you make $200,000 a year, there's a 1 in 37 chance you'll be audited, says Taylor. And if you're a millionaire, your odds jump to 1 in 13.
It's mainly because people with higher incomes also take more deductions, and IRS is a lot of times focused on the deductions that people take.
Especially large charitable deductions.
If you're in an income level and you're taking your charitable deductions are disproportionately high compared to others in that income level, then your return is more likely to be flagged.
Sometimes people will apply for benefits or credits that they're not necessarily entitled to.
Applying for tax credits on things like continuing education, retirement contributions, or energy-efficient home improvements may also draw the attention of auditors, says IRS spokesperson Patricia Svarnes.
You also want to be careful of your allowable deductions. Make sure you don't include all kinds of deductions that don't make sense for your profession.
For example, don't deduct expensive outerwear when you have a desk job or write off a cell phone your employer is paying for. Another red flag, says Taylor, writing off losses from work. That's more of a hobby than a side job, like selling your stuff on eBay or breeding dogs.
Especially if these filers also have a lot of other income from other sources.
Self-employment and working in cash-based industries may also draw more scrutiny, but experts say in the end, less than 1% of the population can expect to be audited this year.